Today we are going to look at the market developments, look at the Nifty, Bank Nifty trend and a few stocks. This week, as predicted, as expected, markets have gone down very significantly. Last week we highlighted some of the fundamental developments that are likely to impact the market. And we also said that the FOMC meeting is taking place and they will increase the rates. Now, the most significant thing is the FOMC increased the rates by 75 basis points. So this is the decision which has shaken the market. They were also expecting something definite 50. Some were even expecting 75 BPS. But what is the most underlying concern is that interest rates will continue to go up at least till this December. So that means markets can be under more and more pressure. And Indian interest rates definitely also will follow suit, and most of the major global banks, central banks, are also increasing rates. Bank of England also increased rates by 25 basis points. So why the interest rate should affect the markets? See, as the interest rates go up, the attractiveness of the equity markets can decrease to some extent. Now, let us say the Indian interest rate, if it jumps to 7.5 to 8%, the long-term return of Nifty is around 11% per annum. Long term means I'm talking about 10 years and more. But of course, there is tax benefits, certain tax benefits are there. So if you leave the tax benefit, and if you're going to get an interest rate of 8% in FD, right now it's not there, but if it moves towards that, then in that case, the gap between a risk and riskless market, it decreases very significantly, right? So there will be more pull out of funds, and parking of funds more in FDs can happen during that particular period. So this is one reason why the equity markets are worried. One. Second thing is that inflation generally, for the reason which the interest rates go up, it eats into the profitability of companies. Their ability to pass on the cost may or may not be there. So the corporate profitability can get under stress. So these are the reasons why the higher inflation translating into higher interest rates have a negative impact on markets. Now, whether it should fall to this extent or not, that also depends on the amount of money supply in the market. Now, what fuels the market rally is, of course, though we may talk about the fundamentals, company, corporate fundamentals, macroeconomic fundamentals, the primary driving situation for any market is money expansion. So, the money supply is the primary reason for the markets to go up or go down. Now, the last 2 years, because of pandemic, global central banks were pumping money, and the stance was called accommodative. There is a lot of liquidity, and excess liquidity also was given, much more than what the market wanted. And that money supply first went into the markets, then into the real economy. So the money supply expansion drove the markets up. Leave alone the fundamentals, which also will be a contributory factor. Now, people may argue that what has changed in the fundamentals, okay, and what has changed, whether the growth is not there or what is not there for the markets to behave like this. Fine, all those things can be debated, whether a little bit it will come down or not. But what is clear is that the money supply which was there, that is being withdrawn. So either you are coming to a neutral state, or there is a chance of money tightening even happening in order to combat inflation. If that be the case, markets don't like it. And because money has to be there for any assets to go up, right? So whether it's real estate or whether the putting money in the equity markets. So so that sort of money supply, when it gets into a problem with a higher interest rate, then in that case, the general tendency for the market is to freeze. So that's what's happening right now. So the fall that is taking place is being projected to many levels. Now, because of the strong correlation that exists between Indian markets and US equity markets, we just need to look at what's happening in the US equity markets to understand what is likely to happen in the Indian market. So we need to get first a broad scenario, then what is a trading scenario, and how do we approach the intraday for intraday traders. Now, let's look at the US markets first. Look at the S&P. So we'll look at the big picture scenario first. Right now, if you see, this is the pandemic month fall, and the last couple of months before, what was the high? Now this is now coming down. It has come down already significantly. Generally, 20% fall from the peak, if it happens, then it is defined as a bear market. Now the high is 48.18, so a 20% fall is approximately 1,000 points. So less than 3,800. No, defines the bear market. Now we have seen already that being broken, and right now we are 36.88. So as per the definition of a 20% this is a bear market situation. Now the next fall, if it falls below 20%, generally the traders look for the next Fibonacci level, which we have already talked about before. Is a 38% fall. A 38% fall is a very it happens only once in a decade also. Recently during the pandemic time it happened. So if it is 48.18 there, then literally we are speaking about in 2.62 of this. It comes to 3,000 approximately. So this is the figure that is being now talked about with the S&P under stress, having hit the 20% button now, and which is at 36.88. There is an observation that probably this could go right up to 3,000 levels. So these are all analyst thing. I'm not saying that no, we should definitely look towards this particular data, but chances are also there, because if the interest rates continue to increase and no positive development comes, then in that case we could see those things dragging right up to 3,000 levels. Now what probably can turn around the situation is that money supply will definitely not be there, and there will be a lot of tightness in the money market, even if some positive development is to take place immediately. What is that positive development? It could be the Russia-Ukraine situation, because that has also been a very heavy contribution towards inflation. So markets generally will not wait for some action to be taken later on by a central bank. If Russia-Ukraine situation comes to an end, then there is a general expectation that inflation also will get tamed, which means there can be at least the global central banks can go a little slow in increasing the interest rates, okay, or at some stage that it can peak fast, the tightening cycle. So the one important development that we need to focus is of course the Russian-Ukraine situation. If it comes to an end for some reason, then in that case we can see a durable bottom in markets. Till that time, we need to keep our fingers crossed with the hope that the worst can be behind us at the earliest, but be prepared for the situation like what is 3,000 levels. Now it doesn't mean that we need to panic, because as investor there is a difference between investor and traders. Now a lot of people wear both the hats. You are also an investor, you are also a trader. So for those who are looking towards fresh investments, or who have already invested but can have the cash also to back it up, then in that case this is definitely one of the lifetime opportunity to go and get into the market in a systematic manner. So if the market is going to fall, then in that case you use this opportunity of heavy fall in order to get into the market for a long term prospects of 3 years and 5 years, a very good return. Okay, so you can look at SIP route and look at mutual funds, which could be diversified, it could be multi-cap. So that is left to you to make an analysis and do it. But the investment is something to be looked at, and also individual stocks which are really the big stocks, like it could be Reliance, it could be TCS, it could be HDFC Bank, it could be Asian Paints. So these are some of the stocks which you can look at during this particular fall, accumulate, and so that you will definitely get a very good return for investment over a period of time. Now timing is a difficult thing, but at the same time we also need to know to what extent the market will come down, and how do you make a planning as far as investment is concerned. Then we will look at the trading aspect. Now if you extrapolate this particular data of S&P and its correlation with the Indian market, then in that case we are expecting something like another 15% fall at least here, which means it could be at least a 10% fall in the Indian market. So which could be from 15,300 levels right now, another 1,500 points, maybe 14,000, 14,300 is a possibility as far as market is concerned in India. Now let's look at that. Now this is the Fibonacci this one ratio from the pandemic month till now, okay, in S&P. So now we are expecting 3510, which is the 50% retracement. So the first alt can come closer to 3510, then probably we are looking at something like a 3197 or 3200, which you saw as closer to 3000. So it could be 3200 levels instead of 3000. So we are probably expectations that the first drop could be closer to 3510, and then it could be the next level could be around 3200. So right now we expect that in case if the rally is to take place also, so 500-600 points of rally is always possible. So 3500 to 4000, 4100 is a possibility. So overall range now for S&P could be between 3500 and 4000 as far as S&P is concerned. Now let's look at how this translates into the Indian markets. The same situation, I'll put it here from this low. So the 38.2% S&P has touched, but we have not touched it. So that is going to be at 14,350 levels. So this is the area which is a very highly possible chance for the market to come down. So 14,350 levels is where probably the Nifty can head towards, because it's only come 1000 points away from the present level, which is 5-6%, which is a complete possibility. So 14,340, 350 levels is where we have to first brace ourselves for getting into the market. So we need to wait at least till 14,350 levels. Now if the rally is to take place, since it has already broken 15,979, we may expect a very strong resistance going back closer to the 16,000 level. So any rally from the present level to it 15,185 or so, and we have always seen maximum around 1,100 points of swing, which is still possible. So 15,900 to 16,000 is going to be a very strong resistance as far as Nifty is concerned, and 14,350, 14,500 around that level is likely to be a very strong support level. So now you can strategize your investment based on this. So wait for a fall which could be closer to the 14,350 or 14,400, from where you can definitely invest a huge amount, because even if it is to go down, the 50% comes to 13,050, where you can increase your investment, and I think it will be quite unrealistic to expect much bigger fall beyond that, and by the time things can turn into a positive development. So the Nifty right now, we have looked at the bigger time frame, so we will look at the daily time frame. So today we got some sort of mini support, because after today's fall it just took some sort of stability there, it could be seen. But this will have this particular fall, this is 15,865, 870. We need to keep as a level which we feel which may be difficult to cross. It's not that easy to cross that 15,860 levels because of the huge fall that we saw yesterday. So let's look at the Fibonacci retracement from 15,860. So which are the levels where probably we can look towards short. See, the first resistance that came should have been at 15,435. That is 15,435 can be the first important resistance now, because that is the 38.2% retracement. Then it can go right up to 15,500, 15,593 to 15,705. But going by this 61.8% retracement should hold. So 15,590, I think 15,590 should probably look towards putting a first sort of resistance for any up move to take place from here. So 15,590, I think we can keep as a most important resistance levels for Nifty for any rally right now. So you can look towards positioning yourself with a short at 15,590 or so, keeping 15,860 as a stop loss. 15,860 as a stop loss. Wait for a pullback closer to the 15,590 levels, and then look towards going short, keeping 15,850, 860 as a stop loss. So you express that in the form of some sort of an option, which could be a put option or it could be a put spread option, whatever it is. So you can do that. Okay. So this is this one you can look towards doing this as far as Nifty is concerned. Now, what are the immediate levels that probably we can look towards if it is to go down? So let's look at the weekly chart. So this is for 15,044. I think this is the support. It could be 15,044. 15,045 is one support, and then below that is 14,600. So 15,050 to 14,600 are the next support levels as far as Nifty is concerned. That is right from the weekly chart. But now going by the Fibonacci, the same this one. Let me remove this. So now this is one pivot point, and this is another pivot point, important pivot point. So we can keep 18,114 to 15,735. So 18,114 minus 15,735. This is 2,379 points, right? So 2,379 points, when you put the first 23.5% of that into 0.235, that comes to 559 points. So 15,735 minus 559. That is the 15,175. I think that is where probably it took support here. See, 15,175, 15,183 has been the first support, supported by this from this high to this place. It just took support closer to the 15,175 levels. So that is the first support that has come. So now the same 2,379. Let's put that 0.386% into 0.386. That comes to 918. So the next support will be 15,735 minus 918, 14,810. So let's look at the support levels. That's Nifty support now was 15,175. Next will be 14,820. Resistance can go right up to 15,590. It can go up to this. Of course, there are resistance at 15,435, then 15,515. All these things are resistance are there. So we can expect the first sort of resistance to be around major resistance to come closer to this. So what is the expected trading thing is that you can go first short very closer to this level, and first profit can come up to this. You can play for the 700 800 points. So you can express that in terms of a put option, okay, because you'll definitely be able to get through that put option, right? So suggestion is that go short at higher levels, okay, and these are the two important support levels, 15,175 and 14,820, which we showed how we arrived at. Okay, so now let's look at Bank Nifty. Now Bank Nifty is taking support at the lowest point that has been reached in the last couple of months. That has not been cut, but probably we could expect that to be cut at some stage. Now any rally in Bank Nifty will have this resistance at the same 78 or 61.8% retracement here. So we could expect 34,620 to 35,240 as a resistance area. So Bank Nifty, you will have resistance at 34,000 34,620, 35,240. So this is the resistance zone for Bank Nifty. So any rally towards this, you may look towards going short. Now, what is the support level in case if it goes down? So now let's remove this, and the first support level, the same pivot point calculation we can use. So this is 38,765, 38,765 minus 33,007. 5,758. So let's put that 0.235 first. It comes to 1,353. So 33,000 minus 1,353. 31,647. 31,650 is one support. So the first thing that we are looking at is a possible move towards 35,620 to 36,240, and then a fall down to 31,650. Okay, and then further to this is you can into 0.386, 2,065, 30,635. 30,635. So 30,635 could be the support which is below 31,650. So these are two support levels that we may get. So you can go for a short in Bank Nifty towards this, with this as a profit target, with this or this as a profit target, and the higher level is the stop loss. That is this particular high. 36,083 as a stop loss. So you can go for a put buying when the rally takes place closer to 35,240 or around that level. Then you can look towards going for a put buying there. So this is as far as the Bank Nifty is concerned. But we will look at the big chart picture as far as Bank Nifty. Now we will do the same Fibonacci this one from here. So exactly it has come to 38.2% retracement, right? So that is why it is taking a huge amount of support right now. That is the 32,000. So in case if this is to break, then probably we may have to look towards the 50% retracement, which is coming to 28,975. So the Bank Nifty 28,975. So the big support will come at this level. The big support, if the fall accelerates, that is, as we say that probably the global markets will still be under pressure. So what is the next level at where the Bank Nifty can be bought, or the PSU, or probably you can get into banking funds? It is this particular level, 28,975, right? So 28,975 is a level where probably we can get into banking funds. And even if there is going to be a fall from there, from that particular place, I think the recovery will be good. And the next level where probably you can look towards investment then will come towards this level, 26,000. So, but that's all another 6,000 points, which is another 20%. And that's going to be very, very deep drawn out. So that's that is a very, very bearish picture that can happen. So I think first we have to keep ourselves right up to 28,950, 960 levels as the place where probably we can look towards probably a durable bottom can play. But then we have to review, because market developments we can't draw a line and say it has to stop there. So based on the present situation and on the hope that further fall will not happen beyond this, and by the time some positive developments can take place, based on that probably support can come at 50% retracement from the pandemic low to the recent last 5-6 months high which had happened. So the Bank Nifty right now, as like any other stock or global markets, it is also under stress. Now, but it has retraced already the 38.2% retracement initially itself, even before Nifty could reach that, because Nifty is still to reach that. So Bank Nifty has already reached that place. So we have seen 2-3 times, trying to bounce from that particular level. It's trying to bounce from that particular level. So right now, the any rally that is going to take place in Bank Nifty, now we'll have the retracement. This is 38%. Probably this 35,792 or 36,000. I think is going to be a slightly a stiff area, because that is the 38.2% retracement from the top to bottom. And also already we have seen the markets from 41,000, the first 23.5% retracement was below 35, 36, 35 and a half, this one. So 4 to 5,000 rupees, so which means getting above 37,000 is 38,000 or 38,000 is not going to be that easy. So this is the rally which took place, right? So from here to this place, this 38,000. So this 38,045 is still a possibility as far as Bank Nifty is concerned in normal circumstances, because this low has not been broken. So getting up to 38,000 still is a possibility at some stage as far as Bank Nifty is concerned. But that is from the technical perspective. But going by the developments that are taking place, I think right now we have to just stick on to what we said about the 36,000 and odd level as a stop loss, and any rally towards 35,600, 36,240 looks to be an area where you can look towards going for a sell. Okay, so this is as far as Bank Nifty is concerned. So we'll just now we will go to some individual stocks. Now we'll look at Reliance, which is single-handedly kept the market on the upside. The Reliance is one stock which has relatively well held compared to other this one. So let's look at possibility of the where Reliance can come. Now see, let's draw the trend line here, and let's draw a parallel line. So this particular line can be an important support for Reliance. That is, in case if it falls, then probably it can hold on to 2250. So right now it's 2590. So Reliance has been holding up mainly because of the crude prices. So fall in crude probably has to be seen, and if the crude declines significantly, then in that case we can say Reliance has topped out. And probably since it's a stock which has been held on now comparatively, so maybe the last one of those stocks to fall in this market. So at this stage, we need to watch out for the 2250 levels. So that's still far off from 2590 levels where it is, but possibility exists for a 2250 levels to come. So Reliance is one stock, probably put it on the care list, but still the stock, probably the investment is going on there. Now this particular week, if you see, there's a great amount of volatility. It fell this, then it rallied to some extent. Now of course it is looking as if this particular area, because 2, 3, 4 times it has gone and then started to fall from there. So which means that probably we are expecting this 2800 to be a very important resistance area. And this week it has opened gap down. So this is the gap down opening this week, which means getting up, first of all it has to close the 2700. First of all it has to close the 2700 levels before we can talk about a new bullishness as far as Reliance is concerned. But Reliance now looks to be slightly on the sideways thing. There is no I think the bullishness seems to be evaporating, but still holding up. So one has to treat this a little carefully, because it is at high level, right? So if you look for some investment here, and if it falls, then probably the loss will be more than compared to other stocks which have fallen heavily. So now we look at some high T stocks, TCS. So let's look at each and every level where probably we can look towards buying, because it's very clear that this is on the downward side. But in order to get some profit here and there, okay, let's look at how we can do this. Now, let's look at the stock from the point of view of the Fibonacci numbers itself. Now, this is what it is, 4043, and this is 3391, right? So 4043 minus 3391, 652, right? So 652, we will look at 652, 3391, 652. So 652 into 0.386, that comes to 251. So 251, 3391 minus 251, that is 3140. It should have 3140 should have held, but if you see 3154 held and then it went up a little bit, and then by nearly 3154, then it went up right up to 3477 and then it started to fall. Now what we can do is that now the next level of support that is coming is 650 levels into 0.618, that comes to 401. So 3391 minus 401, 2990, that is 3000. 3023 it came, so maybe 2990, close to 3000 levels. If by chance it just moves down to this level, that is the approximately 3004. This is 3004 low, and 3023. So maybe a little bit of fall, 20-30 points downfall, then probably it can again revive to some extent. Though the overall trend is down, you can get some 10%, even 10% rally from these places. That's what we are suggesting. That at important levels you buy, and then just keep selling at some higher level till such time you just see the big picture turning around. So how will you then look towards looking for a buy? Then in that case you need to look at the Fibonacci ratios only. So one is the Fibonacci ratio now from this level. This is the most important one. So 3070 is at 38.2% retracement from this level. So it has slightly even gone below that. So it looks as if TCS is a decent buy at 3070, failing which it can go to 2769 or 2770 levels. So next big drop in TCS towards 2770 is definitely a buy. So from investment angle, keep 2770 as an important level where you can definitely go for, because that is a 50% retracement from the pre-pandemic month to what the high that we are seeing. So 2770, keep a high on that. So right now we may have struggled above 3440 levels. We may have a struggle which is above 3440 levels. So let's look at the scenarios where now this is the weekly chart. So we will look at the Fibonacci so now if there is a movement, it can go up to 3293. So right now, and that has been the fall from this week big fall. So I think that may not be easily taken off. So we could probably expect some support, close resistance 3242, 3293. So you can keep 3240, 3245 as a place where probably if you have already bought closer to 3000 levels, then in that case that's a place where you have to take a profit. 3240 levels you have to take profit, and then wait for a dip. Okay, again let us look at where the dip is going to come, and then look towards buying at that particular level. So right now that probable dip can after that 3000 is broken, then in that case we may look at 650 into 0.765, 497. So 30 it may then come to 2930 levels also. So this is 3385. So 3385 even minus 650 level, the same 100% ratio, that will come to 2735. So we may not expect much fall below 2735. So any fall which is below 3000, that is 3000 to 2750 levels, is a good level to look towards investment buy as far as TCS is concerned. Right now, anything towards 30 to 40, 30 to 45 is a level where you should take profits if you have already bought something, or if you have already bought previously before at say 33.85 or no, these levels. In that case, just make an exit and then wait for a fall and then buy. So where you can reduce your cost of purchases. So now we look at banking stock, HDFC Bank and ICICI. Most of these stocks are now at the 52-week low. So to that extent, they are all in a slightly bad situation only. But now the next supports that probably we could get in HDFC Bank, the same Fibonacci thing, that is for investment purposes. You can go now 38% is gone, so I think we should look towards the 50%, which is the 1227. So right now it's at 1271. So 1225. So next support now that we can probably look towards this 1225. So 1225 is an area where probably we can look towards next important support where HDFC can be bought. And if you buy at 1225, then you can make an exit. Then whenever it rallies back to 1344, so you can still get something like a 10% rise even in a falling market if you buy at a strategically important levels. So if you're a buyer, if you're only concentrating on buying for investment for a few days or for a week or so, then buy at some important levels, which is what now we are indicating. Now in the case of HDFC Bank, it can come closer to 1227, 1230. If you buy it, then first risk that the risk that you should take is not much below about 1344. Then look towards if the rally continues to be sustainable after some time, then we can be on board again. So HDFC Bank right now it is bearish, but at the same time can be bought at lower levels for up 10% up move. Okay, so this is as far as investment is concerned. So we'll look at ICICI Bank. Relatively, ICICI has been faring better compared to HDFC Bank. But nevertheless, even that is so that means if at all if the rallies have to come, then in that case this has the better chance of getting in or climbing faster because of its relative strength. So ICICI Bank is something which we can look at it, and this level has not been broken. So that's let's look at that from the Fibonacci angle. So that comes to 38% retracement. So I think the 637, 640, which can be revisited. The 640 can be revisited. So we can look towards 640 buying, and in case if it goes down, and 565, 570 can be an average. Next level to average, because some of the investors will be looking towards some averaging out. And I think these stocks are structurally good stocks. It's a cyclical problem, and because of the global situation, it's happening like this. Okay, but we cannot say the same thing about certain commodity stocks where we feel that things are very, very dangerous. For example, Tata Steel. Now, because of the inflation fighting with increase in interest rate, there is a collapse that can happen. And that is what is happening right now in certain stocks in commodity groups. So Tata Steel, if you look at it, so now this fall in Tata Steel that is taking place is a little huge. I think we cannot put the 50% retracement, and I will say no buy it. In case of tech stocks, we could say. In case of Reliance, we could say. Even in case of ICICI and HDFC Bank, we could say. But right now, let's look at this stock. See, this took support first year, then it took support somewhere here closer to that. Now it will be a support which you can say 891, but definitely it may not hold on to the 891. It can fall. It can even fall to 738. It can even fall to 520 at some stage, because the nature of commodity is that it can have a huge fall in case if it falls. So what went up really because of the interest rate reduction, which got benefited and the commodities got pushed to that level. That cycle has now gone. That cycle is gone. So now we should not be looking towards a buy at this stage. And in fact, it is more of a Tata Steel and all is more of a I would say it's a sell on rally. It's a sell on rally right now. Because of the interest rate cycle. So I think we should be looking any rally if it comes closer to 1044, 1045 levels. If you have got any stock left, you can sell, and if you have got something to do in trading, then you can buy as far as put is concerned. So right now it has fallen closer to the 890, 891. So probably we can wait a little bit, wait for a pullback, and then do that. Now this is so commodity cycle. Be careful about it. Now we'll look at the auto stocks, not generally doing well, but still they are also in a bearish mode only. Okay, Tata Motors, generally speaking, this stock which has done generally well, and because of its lead in EVs, so the fall can literally reverse at some stage or other. Now it has also fallen in tandem with the overall performance of the market. So let's look at the Fibonacci ratio to get some idea where I think probably this stock is an investable stock. So it has not fallen to 38.2%. So 355. I think Tata's this one Tata Motors right now at 388. So closer to 355, 360 is definitely a good level to go for a buy, and it can push back at least to 425, which can give you 20% even profit as far as Tata Motors is concerned, even in a bear market scenario. So I think we should be looking towards buying Tata Motors closer to 355 levels for a push towards 425 levels. So this is as far as Tata Motors is concerned. So we have looked at some of the most important sectors, like the commodity sector we have said avoid it, and the banking sector you can pick up ICICI compared to even HDFC Bank, and Tata Motors on the auto side it can be. IT stocks generally have a clean balance sheet, and no rupee depreciation is taking place. So it is a fall in tandem with the global market. So you can look towards buying at some decently low levels. And Reliance has just been holding, and probably we need to exercise caution as far as Reliance is concerned, because if crude falls significantly, then probably there can be pressure on Reliance stocks as well. So in sum, the overall situation is something which you have to be very careful, and any rally in Nifty or Bank Nifty is a place to go for a sell of another 300, 400 points if it rallies. And in Nifty, if it is going to fall below 15,175, the next support is going to come at 14,870, and all the way it can push itself down up to 14,300, and not much of a prospect above 15,900 for the time being. Bank Nifty also, any rally from here right up to 36,000, not 35,500 to 3600 seems to be a good reason for going for a sell, for a fall which could be between 31,650 to 30,650 initially, and then probably a little lower. But in generally speaking, the high correlation with S&P makes us nervous that probably the fall could be there still, and the rallies will not stand for a long time. But touch wood, by God's grace, if at all the Russia and Ukraine situation turns around, it can start offering the hope of a turnaround in equity markets for a sustainable rally. So thanks for the participation today. So if you have any questions, please ask. Thank you. So 32,000, see, you have to be careful. Bank Nifty, let me say, so right now I think the close is 32,743. Somebody has asked at 65. and now it's a 355 because I think probably there is a rally that has taken place probably after you bought. And if it is going to be, if it is a weekly option which you have bought, there will be quite amount of time decay because it's almost at the money option. So you will have important time decay. And so let's look at the for understanding purposes. So the time decay will also depend on the amount of market movement that you are going to take place. So let me say, if nothing happens, now for understanding purposes I'm saying, so let us say underlying price is 32,700, exercise price is also 32,000. Now before that we'll go to the bank Nifty itself, option, Nifty options. So next week, that is 23rd, and let's say it's 32,700, and put option, it is a 355, and right now the price should be closer to 33,700 or so, right? It is 495 and 140. So we will take the futures price as 32,840, right? Days to expiration is say today is Friday, Saturday, Sunday 2 plus 4, 6 days no to expire, and interest rate will put at 0, dividend yield is 0. So 352 rupees, right? So 355 rupees or so. So what is the time decay? Now if you see the time theta is the time decay, it is 34 rupees. So if nothing happens, then it will lose 34 rupees. 2 days is gone. Okay, so you will have 2 days completely gone, and the third day it will depend on the movement. Suppose if it is also static on Monday, by Monday afternoon or so, then you lose for 3 days. But clearly you will have the 2 days because there's a chance that today rate it would have factored also. So 2 days means 68 rupees, and third day means 100 rupees. So there's a chance that if nothing happens, 354 minus 70 rupees approximately can be out from your pocket. That is, time decay can take you out to 284 rupees. If the market opens flat on Monday without any change in volatility, the option price can come down for 32,700 at to 285 rupees. 285 rupees. But if the price falls, then in that case, no, you will have the benefit of that fall. If the price rallies, then in that case, no, you will definitely, because of the delta, the price, the premium will further lose. You will lose value on that. But considering that 32,700 minus you're paying 500 rupees already as a premium, 31,600, 700. So it's slightly tough call as far as getting into your profit is concerned. But considering the present volatility, you may have a good chance to do that. But next time, think about how to do this, because you should not attempt to do like this. I think we should be very careful not to waste premium like this. Okay, because in a week, if you lose, then every week you pay 500 rupees, it will be a big loss. So you need to strategize as far as option premium payment is concerned. Thanks for your participation. Hope to see you on Monday or Tuesday with some new topic. Thank you very much.